Violence in Libya weighs on global markets, lifts oil prices. The S&P 500 index rose for a 7th consecutive day, which is the longest rally since 2017, and got closer to its last year's September record high as investor sentiment remained bullish following monthly jobs data release. The index retraced more of its October-December downward correction of over 20%. The Dow Jones Industrial Average gained 0.2% and the Nasdaq Composite gained 0.6% on Friday. In general, global stocks edged higher earlier following remarks from both China and the U.S. that progress was being made in trade talks. Payrolls rose by 196,000 in March versus the expected increase by 177,000. Wage gains eased and the unemployment rate held near a 49-year low. Average hourly wages in March were up 3.2% from a year ago. In general, the reports show that the employment and labor market are still solid, which should underpin consumers in the months to come. As for trade-related news, China said new progress has been made in trade talks with the United States as the two sides prepare to resume discussions next week to try to secure a pact that would end a tit-for-tat tariff battle that has cast a shadow over the global markets. In a statement on Sunday, Chinese news agency Xinhua said that the remaining issues would be handled through various effective means. In turn, the U.S. Trade Representative said that the latest round of negotiations that ended on Friday included intellectual property, or IP, forced technology transfer, non-tariff barriers, agricultural services, purchases, and enforcement. On Monday, Asian stocks were mixed as optimism started to abate and investors digested better than expected jobs data in the U.S. and reports of progress in trade negotiations between Washington and Beijing. In Japan, the Nikkei 225 slipped 0.21% to close at 21,761.65. In China, the Shanghai Composite declined slightly to 3,244.81, and the Shenzhen Composite fell 0.551% to 1,770.20. Over in South Korea, the Kospi closed fractionally higher at 2,210.60. The risk-on tone waned somehow due to geopolitics, a resurgence in fighting around the Libyan capital of Tripoli. As the Libyan commander's forces advanced toward the capital and clashed with rival militias, the United States has temporarily withdrawn some of its forces from Libya due to security conditions on the ground, a top military official said on Sunday. A small contingent of American troops has been in Libya in recent years, helping local forces combat Islamic State and al-Qaeda militants, as well as protecting diplomatic facilities. There were no details on the number of U.S. troops that have been withdrawn or how many remain in the country. In Europe, stocks closed lower on Monday as investors prepared for a tough earnings season, as analysts have warned that the upcoming earnings season could be the first quarter of contracting corporate results since 2016. JP Morgan and Wells Fargo are both poised to report their latest figures on Friday. Europe's bank stocks were among the worst performers, down 0.6%. In particular, Germany's Commerzbank was the worst performer in the sector and dropped 2.5% amid ongoing merger talks with Deutsche Bank. It was reported that the regulators have set strict standards for a deal, including demands for a detailed workforce reduction plan. On the data front, German imports and exports fell more than expected in February. The Federal Statistics Office said seasonally adjusted exports dipped 1.3% month-on-month, while imports dropped 1.6%. Despite the weaker numbers, the euro-US dollar pair rose to fresh one-week highs on signs of waning USD demand. The prices finally broke above the 1.1250 intermediate resistance and registered a high of 1.1274. The greenback dropped across the board, including emerging market currencies, and despite higher US yields, and this was the key driver for the euro. The official report showed that the U.S. factory orders dropped in February 0.5%, in line with expectations. As for the key upcoming events, on Wednesday, CPI data is due and also the FOMC minutes will be released. As for common currency itself, the major event will be the European Central Bank meeting, also on Wednesday. Most market participants expect the bank to keep a cautious tone. In commodities, oil prices rose to fresh 5-month highs above the $71 handle on Monday after a break above the $70 late last week. The rally accelerated as fighting in oil-rich Libya threatened to disrupt exports as eastern forces were advancing to the country's capital. U.S. sanctions against Iran and Venezuela continue to push up crude prices as well. Besides, OPEC Plus has pledged to withhold around 1.2 million barrels per day of supply this year. The group, led by Saudi Arabia, has exceeded those expectations so far this year. Meanwhile, Saudi Energy Minister Khalid al-Falih on Monday said it was premature to say whether consensus existed among OPEC and its allies to extend cuts, but a meeting next month would be key. However, Brent ignored the comments as investors were focused on geopolitics. Gold prices were lifted by a weaker dollar. The precious metal briefly rose above the $1,300 handle on Monday, but failed to keep up momentum and retreated partially afterwards and settled marginally below the key level. Investors are awaiting minutes of the U.S. Federal Reserve's March meeting later this week and trim long positions in the greenback ahead of this event, which plays into the hands of gold bulls. Also, a weaker dollar demand was due to the U.S. jobs report on Friday that signaled a slowdown in wage growth. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.